Imagine your company is like a giant, bustling household. It needs things to run: electricity, paper for the printer, maybe a heroic amount of coffee. When you buy these things, you don't always pay with cash right away. Instead, the company that sold you the coffee sends a bill, an official piece of paper, or an email that says, "Hey, you owe us money for this awesome stuff." That bill is called an invoice. And the whole process of handling these invoices, from the moment they arrive until the moment the money leaves your company's bank account, is called accounts payable, or AP for short. It's essentially your company's system for managing its short-term debts and making sure everyone who provides a service or product gets paid correctly and on time. Think of the accounts payable department as the financial gatekeepers of the company. They're not just paying bills willy-nilly. They are detectives, accountants, and schedulers all rolled into one. Their job is to verify that every single bill is legitimate, that the company actually received what it's being charged for, and that the amount is exactly right. This isn't just about being fussy. It's about protecting the company's cash. The adventure begins the moment an invoice arrives. Invoices can show up in a physical mailbox, a dedicated email inbox, or through a special supplier portal. This is step 1, receipt and logging. The first thing an AP clerk does is capture it. This isn't just sticking it in a pile on a desk. The invoice is immediately logged into the company's accounting system, where it gets a unique tracking number. This is like giving the invoice a passport for its journey through the company. It ensures the invoice doesn't get lost and creates a clear audit trail. From this point on, anyone can look up that number and see exactly where the invoice is in the process. Next up is data entry and supplier verification. Someone, or increasingly some software, reads all the key information off the invoice. Supplier's name, invoice number, the date, the amount due, the payment terms, and enters it into the system. Now we get to one of the most important checks in the entire process, the three-way match. This sounds like a wrestling tournament, and in a way it is. A battle against errors. The AP team takes the invoice and compares it to 2 other documents: purchase order, PO, goods receipt note, GRN. The PO is the document your company created when it first ordered the items, saying, "We want to buy 10 boxes of paper at $20 each." The goods receipt is the proof from your warehouse or receiving team that says, "Yep, 10 boxes of paper arrived." The goal is to make sure all 3 documents match perfectly in item, quantity, and price. But what happens when they don't match? This is called an exception, and it's super common. Maybe the invoice says $22 per box instead of the $20 on the PO. Or maybe only 9 boxes of paper arrived instead of 10. This is where the detective work really kicks in. Once an invoice has been matched or its exceptions have been resolved, it can't just be paid. It needs to be approved. This is a crucial internal control. The invoice is sent electronically to the manager of the department that ordered the goods or services. After the manager approves, the invoice returns to finance for a final accounting step. This is where it gets coded. Every cost is assigned a general ledger code: coffee bill, office supplies, new server, IT hardware. This coding is vital for budgeting and reporting. With checks, matches, and approvals complete, the invoice is posted to the accounts payable ledger. The system then schedules the payment. Companies rarely pay immediately upon approval. They pay according to supplier terms, like net 30. On the scheduled date, the payment is processed. Payday for the supplier. Payment methods: paper check mailed, ACH transfer, wire transfer, virtual credit card payment. The payment is made, and the supplier is happy. The story doesn't quite end when the payment is sent. 2 final housekeeping steps are essential for a well-run AP department: reconciliation, archiving. So why go through all this trouble? Because a smooth, accurate, controlled AP process is vital to a company's health. It does much more than pay bills. It protects the company's most liquid asset, cash. It prevents errors, duplicate payments, and fraud, stopping money from leaking out. A good AP process builds strong supplier relationships. Accounts payable is a source of invaluable business intelligence. Analyzed data lets leaders make smarter, strategic decisions. AP processing is a cornerstone of financial control, operational efficiency, and strategic insight. It's the quiet, meticulous engine that keeps a business healthy, honest, and humming along.